Good morning, everybody. This is Chrisi from SOLSTICE ATR and Balkan Capital Research. Hope everybody's enjoying their weekend. And what I'd like to do is cover the overall weekly market outlook for the coming week. So let's first start by taking a look at the combo. We're using the SPX, the NASDAQ, the Russell, and the Dow. This is basically showing what the S&P 500, the NASDAQ 100 are doing in relationship to the Russell and the Dow Jones Industrial Average. Most importantly, the monthly candle, we came back retraced below the 18 SMA. We stalled in this area where was the consolidation. This was the prior low from August. We retested that area, and in the following week we got a little bit bounce, which is inside the prior candle, engulfing candle. We are closing inside. If this is going to continue and clear the 39 450 to 500, I think we may go back up. If we retrace and come back in, we fall back to the major support, which is the 50 moving average, as well as the prior channel on monthly chart, taking a look at a 10-year market outlook since we moved higher. Let's go to the weekly chart so I can show you what's going on. We'll go 3-year weekly. And I want everybody to pay attention that I had drew an up channel from here. This was as of September 2017, and this is as of December 2018 ongoing to the 2019 area, and those two are basically parallel to each other. This was the prior resistance we had here before we broke out higher. We came back, retraced to that area, and we bounced off the 116 SMA and the channel. In order to continue higher, we have to get back inside the prior breakdown of this channel to go back to the 50. And this shows where we retraced back. If you take a look at the high and low, we retraced 50% of the move on this week's move, and we came back in to close inside the week before prior candle, which was really engulfing down move because of the fear gauge and the coronavirus. So from that, what I'd like to do, go look at the small cap first of all, RTY. And RTY on the weekly chart, we have the highs and lows of the 3-year range. We consolidated in this area for a while. We kept chopping our heads up the top and down here, and we got a little bit higher. We missed a double top, and eventually, because of the coronavirus, we broke through that channel down to the downside. We got a gap in here, which I don't have it marked. I think in order for the Russell to continue high, this is very important thing that I noticed in the Russell. When it came back to the retracement, it came back to this area, and this area, and that was the 38.2 fib before we eventually broke back up on the weekly chart, and it acted as support. If this is going to act as support, it has to come back to the 38, which we retested. I know the Russell is a little bit weaker. We fell through it, came back down, we closed right on it. In order for the Russell to continue lower, it has to lose the 1445 and continue lower to the 1370 area, and eventually where we broke out of this area here. That means the market has to be dramatically bearish in order to continue. Remember, the Russell is the canary in the coal mine that leads all the moves down and retraces back up. Is there a possibility of the Russell continuing lower? Possible. If not, take a look back at the 1500, and as well as coming back to the 61.8 and the 50 fib on it. That would be a great retracement if we don't fall. Let's take a look at the Dow YM. The Dow Jones Industrial Average, that was the prior 3-year highs before we broke up. We retested it, came back in, retested, came back in, and eventually we took off. We came back to that consolidation area where we fell from, and we hit the 116 SMA, got support. We retraced 50% of the move where the 50 SMA is. You notice that on this candle. This is the 50 SMA, which we retraced to. We touched the 116, haven't been able to clear it. I would like to see coming back up not continuation lower to the 200 SMA. This is where the breakout was from before. This is the consolidation, retested, came back a little bit below it, came back up, came back in, and eventually went back up. We're retesting this area. I would like to see it hold. If not, we'll come back, to the 200 SMA in this area back here where the move started from 3 years ago. So let's take a look at the NASDAQ NQ. The NASDAQ looks a little bit more stronger than the S&P 500. And what we can do is, I want to do this on a channel because the other ones I got them, done before. So if I take this high here, connect it, oops, get this high to this high here. Oh, it did it, this again. Okay, let's do it one more time here. To this high. And what I want to do is mark this with a dash line, edit the properties. And what I'm doing, basically changing the color on it to a gray color, making it a dash line. I'm going to do this as a level 2. So that way, that's the high from before. If I take this candle here, okay, you can see that. Connect it to this one. And what I'm going to do is take that gray one out of the way, edit properties. And I'm going to make this into a gray color. And do the same thing at the bottom. Make it 2 so it's very visible. If you notice, these two are parallel in the uptrend. They are holding the 50 SMA, which is, the NASDAQ has been a little stronger on the retracement of the move. When it fell down, it touched the 50 SMA in this prior channel and bounced off automatically on it to close inside in the following week on an uptrend. This was the prior breakout of these 3 levels. And we broke through them. We came back, retested, and we closed right up in that area. So if I go from the weekly to the daily on the NASDAQ, and I want to show you why I did this. If you notice, this was the prior, this one's, I'm going to get rid of it. I don't like this area, remove drawing. We no longer need that longer time frame. You can see this is the prior breakout, which we don't really need anymore. I can take it off, remove drawing. So we have this major event and this major event here. And I have this prior, consolidation. We came back and retested it. We did hold the 200 SMA on the daily, and we bounced back to the 116 SMA. In order to become an H pattern, this is, if they consider this is the leg of it. This is the, the handle. This is an H. And if it's going to fall, it's going to fall through here. Break that double bottom and retrace 100% of that move down to here where the consolidation and the breakout was. So we're going to put an oval in this area so that way everybody knows this is where majorly it can come back to. This was the prior consolidation before the breakout. You see this here? So what we're going to do, we're going to mark this area here to this area here with an oval. Okay, everybody? This is the area, and if it's, in order for it to continue, I would like to see the 8800 retrace in order to go back up. And what I'm going to do, the same distance from here to here, it's the same distance from here to here. And what I'd like to see is basically come back to this area here. I know we tested the 50 SMA 2 days in a row, the 50 Fibonacci, couldn't get to the 50 SMA and fell through. So I have this oval here and this oval here. In order for the market to continue lower because of the fear and lose the 200 SMA and lose that double bottom, it will eventually fall down here. If not, and it retraces back to the 8800, look for the upside on the other end. So let's take a look at the ES. Okay, that's the S&P 500. It did a similar retracement. This is the H pattern coming down, going back up to the 50% fib. This is the high. This is the low. This is the 38%. That's the 5061. I had said last week, we can retrace back to the 5061. We missed the 61. We hit the 116 simple moving average, which is this one here. We hit the 50 fib 2 days in a row and eventually fell down. But we closed on an hourly candle and a daily candle in an up move. If this move gonna hold, This is very important that we see this. I'm going to go back to the weekly to show you what I've done. Same thing, this is like the NASDAQ, this is the high, this is the low, and we had broken these two channels up here in order to continue higher. In order for the ES to continue higher in NASDAQ, there has to be a change and they have to find a cure for the coronavirus. There's a lot of fear. We had Ebola, we had the Spanish flu and everything. It didn't cause the same reaction. Today, the media and all the news is causing a big fear. And most of the people that are getting infected are elderly or younger that are passing away. So remember, if there's a cure, they find and they're starting to let go of the people that were in basically getting themselves cured in the hospitals or wherever, and they got the right treatments and they are released in Asia and people are going back to work. This incident that we had the last 2 weeks will be a glitch on the map like we had when the elections happened, when the Federal Reserve Board increased or decreased interest rates. Remember, trade what we're going to see, not what we think. And what I'm going to do from the weekly, go to the 20-day 78-minute chart. And what I wanted to say, this is the week that we had the dump. Eventually we lost this gap here. I did not mark it with another color, so what I'm going to do is mark this whole thing here with a kind of an oval color and change the color on it to be pinkish. This is a gap that we have up there that we have to come back and retrace to, and I'm going to mark it with pinkish color. There we go, and put it up there, so that way we know that's a major 2 gap area that we have to clear. We have a gap here from 2 days ago. This gap we did not finish at all. We bounced back up. The NASDAQ filled it, the Dow filled it, the Russell filled it, but the S&P missed that little tiny gap in the overnight. We hit the 80, we retraced back to the 63. Up here we are still bullish as long as we're above the 29.50, because this candle wasn't engulfing into the close, because they thinking that the Federal Reserve Board may make a change in the trend of the market and it may head back up if things do settle down after March 18 after the increase in interest rate. This is a 15-minute bar showing you that gap from a couple of days ago. This is the overnight. I marked it and I marked it here. We retraced a portion of it, hit the 50, came back in on the 15 SMA, but we closed above the 29.50 area 45. As long as we're above there, I think we are still bullish. If we are bearish, we have to lose that area and we have to lose on the daily or the 4-hour candles. Let's go back down here. This is the 20-day. We have to lose this area. The 28.53 on the weekly and the daily chart shows it in order to continue low. And what we're going to go do is on the weekly, show this move. We're going to lose that double bottom. See that 55? This is the same area. In order to continue, we had this marked prior in here in order to come back to this area, come back to the 200 SMA, which is really, really far away. So what I'm going to do, this was the consolidation before the breakout. You see this 1, 2, 3. So what I'm going to do is mark an area here with an oval. And I'm going to mark, see this area, that's the gap. So what I'm going to do is mark this area. We still have this gap up here. I'd like to see the 61 and the 38% clear. I mean the 50 and the 38.2 fib clear. So what I'm going to do is mark it here. In order for the bears to continue lower on the daily chart, we have to lose that H pattern down here in order to continue lower. If this U-turns and goes back up, I'd like to see this area back up here retraced to in order for the market to stabilize before the prior breakout here. The 3080 that took us above and we continued higher, we came back in, we continued higher, and we fell back down. So I hope this was helpful. What we can do is take a look at a couple of instruments, just looking at them, just to give you an idea. AAPL. I mean, watch it was the NASDAQ. If you noticed, I mean, it got a little bit stronger on Friday as well. It didn't do an H pattern to come down here. You can see it did not finish the H pattern to down here. It retraced to this level. This was the prior target label when we came back, when we broke out of it. We went higher, consolidated, fell on after the earning report, went back up, eventually fell off the coronavirus, bounced back up because they worried about, manufacturing, getting things back online and stuff. So that's Apple. Let's take a look at Amazon. Amazon is in the distribution. Amazon got a little bit, this is the, after the push up, after the report and stuff, we came back in, created an H pattern. Amazon looks a little bit weaker because it's not at the 50% fib. You notice we retraced 50% of the move of last week's move. We couldn't get back to the 50. We fell back in, and on Friday they tried to get it back up. This was the prior consolidation. If Amazon, in order for it to get a little bit stronger, it has to clear the 1925 to continue higher. If it loses that area, look for the 1810, 1800, and eventually lower. Let's take a look at Baidu. I'm just going through them very fast, and I'm using, a 4-hour chart. This has an H pattern. You notice it already lost it. Let's see what happens with Baidu. I mean, this is some of the things you have to look for when we're trading. Let's take a look at Baba for direction and levels in order to get support and resistance. If this is going to act as 3 bottoms, if you notice, this is one down 100% of the move, came back up, came back in. As long as Baidu is above 203, 205, I think it can retrace back up into this area in order to continue higher. If not, look for lower. Let's take a look at Facebook FB. Facebook, notice it broke through the H pattern and fell lower. If we go to the daily chart, I mean, I should do the daily. I know I'm using the 4-hour. Let's go just daily. At least people can see, hey, this is the prior consolidation before the breakout. We fell through that channel. We still got that gap up from the week before. Facebook only retraced the 38% fib and fell back down. This is the F3. So let's keep an eye on that one. Let's take a look at Google. Google did 100% retracement of an H, went back to the 50%, came back to the 100%, bounced off the 200-day moving average. If this 200-day moving average holds it, goes back up. If it falls through, there's nothing to consolidate until this oval here and this prior breakout of these candles here. So the retracement would be where? In this area. And what we do, we put an oval here, and I do have an ADX DMI green box, which we can retrace to 100% of the moves back down there. Let's take a look at after Google. Let's take a look at Netflix. Netflix was a little way better because people are staying home. I don't want to sound bad. If people are scared from the virus and stuff, we are in an up channel. This one is no longer valid. I'm going to move it out and do one from here to this candle here. So I'm going to keep that there. So what are we going to do? Grab this candle here. Going to go get a channel. I do like Netflix in the long term. If it does hold and the market does turn, I mean, some of the stuff that got really banged up, I mean, you can see it. This is an up channel on it. Or even if I don't do this one and I grab the prior consolidation area before the prior breakout, this was this candle here, that would be parallel with the one down the bottom that we have down here. You see it? If Netflix can continue above this area, clear the 30-80 area, it can continue higher. If this is a small H pattern and it falls through the 50 SMA, there's nothing to support it till the 38.2 fib in this channel here. So what I'll do, I'll just put a little oval for you guys in that area, okay? So that's something to look for in Netflix. Let's take a look at Tesla. Tesla, it fell down, but if you notice when it fell down, it retraced to the 50%, looked above, came back in, couldn't clear, but still in an up channel. If it doesn't fall through the 50 SMA and this support, basically the retracement would be down here. We're going to put an oval here, which I don't see it coming down that far. If it does fall through this channel, there's nothing to support it at 600. This area won't support in this consolidation. It falls back 100% of the move. Or if it clears this area, the 3850, look for the other side of the 61.8, which is this area here. So I'm showing you both scenarios on Tesla. Let's take a look at Goldman Sachs. Goldman Sachs, if you notice, This was the prior breakout. You know, we retested down, up, consolidated, eventually broke. We've revisited 100% of that move. We came back a little bit below. This consolidation here has to hold Goldman Sachs in order to come back up into this area. If it cannot come back to the 210, Goldman Sachs is going a little bit lower. Let's take a look at American Express, AXP. I'm just kind of going over some stuff. You can see that whole move from prior April got retraced. Let's take a look at MA, MasterCard. MasterCard did hold a little bit better. It retraced 50% of the move. The 50 simple moving average, the 50 Fib, came back in, touched the 200 SMA. If it's in order for it to continue lower, it has to fall through that double bottom to retrace to this consolidation, and we'll put an oval here. Basically, you can see where the buyers are. If it U-turns and comes back, we're looking for the 38%, 50, and the 61.8, which would be this area here. So I'm doing this on purpose just to show you guys how to look at things to trade in the direction of those moves. Let's take a look at /ZB. I'm going to look at gold, and I'm going to look at oil. ZB, if you notice, because, you know, they're going to decrease interest rate, the par value, you know, because of the fear and what's going on in the market last week. The 30-year Treasury note broke out of the 167 area, 166 to 180. This is a little bit overextended, okay? We are so far away from the 18 SMA. In order for this market to stabilize, they have to find a cure and fix the problems with the coronavirus. They made this big panic in the market, and look where the bond's supposed to come back to. This is really overdone, and I'm going to put an oval here. I'd like to see it back in this area. Let's take a look at gold GC. If you notice, the week of the virus and everything that happened, I'm zooming in just to show you something. This was the, oh, everything's going to be fine. They dropped gold down. The following week, which is, this is Monday, Tuesday, Wednesday, Thursday. This is Monday, Tuesday, Wednesday, Thursday, and this is Friday. They retraced 100% of the move because they are, something's happening. Oh my God, we cannot be in this area. We have to put money aside. We have to go into gold. That's the fear gauge, and all of a sudden, this whole week dump, which we retraced to the 1550, and once we cleared the 1600, off back to the races to the upside. On Friday it was weak. We had a push down and into the close. All of a sudden this thing rocketed out and took off. So are we in an up channel? You can see I have this up channel. I'm going to go to the weekly to show you something that I've done on it. I think it's reaching exhaustion again. We are far away from the 18 and the 50 SMA. I'd like to see gold come back in here. You see this up channel? This is the down move, up move. It's an inside candle of an engulfing candle. It closed in on the weekly. Let's go back to the daily. I'm going to go back to show you something in it, which is really kind of interesting and interests me because it's retraced to where? The 50 simple moving average on the daily, the 18, and went back up. On the daily and the weekly, it's still bullish, continuation to the upside if it breaks through that up channel in this channel from here that I drew. These two are parallel. I kept this one higher in order to make sure that people understand. Just move up this way. Okay. What I want to show is basically we're reaching up into this territory. Once we get up in this area, there's not much to support it because it's far away from the 18 and the 50 SMA. It needs to get some, in order for it to continue higher, it needs to consolidate in this area to continue higher. If it keeps running fast, eventually that fall is going to be more harder on gold. I'm not being bearish. I'm just letting you know what I see. Let's take a look at oil. And this is something that's really interesting in oil. I really like oil. Most people are looking at it, oh my God, everything's on hold because of the Asian market, the corona, everything has stopped. This was the prior breakout from 2 years ago in June. We fell back in December, January. This was the December of 2018. We fell down. We retraced back to the 64, 66, couldn't get back to the 68 area. Came back in consolidation of the 50, went back to the 63. And this is the coronavirus. Oh, we're offline, boom, drop it. Come back 2 days later after the Monday, Tuesday, tried to push it back up. We retraced to the 38% FIB. And eventually Thursday, Friday, dragged it back down. Oh my God, everything's going to hell. Oil's never going to be used. We're not going to have any shipments. We're not going to have manufacturing up. We're not going to have any electricity up. Everybody's staying home. And they drag it back down to this area. I'm going to go from the weekly to the monthly chart. So I'm going to go 10 years, monthly. This is something very interesting that I like about oil that most people are not looking into. This was when they said everything is going to hell and we went down to 26, or it's going to 20. I called the 32.28 area myself to the long side. We eventually got to the 42, consolidated to the 50, came back, retraced, and we continued higher. If this is an H pattern and I think oil's going back to that 26, that's fine. If this is going to hold and clear 43.50, if it's going to hold and clear 43.50, look to retrace back to the 50% FIB. I'm not bearish because this fell through this channel, this major support channel. I'd like to see oil consolidate, break up, and come back to this area. If it's not gonna come back up and fall through this 40 area, okay, we know we are wrong. I'm gonna try to start positioning an entry into oil to the long side. If it falls through 40, I'm gonna let it go. So that way I don't harm myself, wait for the retracement back into this area in order to continue higher. I hope this was helpful in oil. Let's just go back to the ES to summarize it. This is the ES monthly chart. This is the up channel that I'm talking about. We have these two channels up here. Let's go back to a 3-year channel, weekly. If this is not going to create an H pattern and fall through the 116 SMA, this was the prior consolidation, the 2875 area, 2850. In order for it to continue to the 2600, where everybody thinks it's going to come down to here, the market has to be very bearish. The coronavirus spread all over the world. They don't have a cure. Everything is on hold. Federal Reserve Board, whether they pump money or the EU or China, it's not going to solve the problem until everybody's back up working. So I'm not being bearish. If this thing's U-turns and goes back up, watch your fingers, trade what you see. Let's go to the daily chart one more time. And this is the daily that everybody's looking at, the H pattern, in order to fall through and continue back down to this area where we ended up, breaking out, coming back to the 1855, retested this area, bounced off this area here, that November area. In order for us to fall down, we have to be super bearish to fall down and travel the same distance from here to here. We double it, or from here to here, you do 1/3 of it down. So if it's not going to turn the other way, look for the upside. And what I'm going to show you on a 15-minute, we need to clear this area to come back up here in the 2980 area to the 3080 in order to continue higher. What I'm going to do, go to style, go to monkey bars, and I want to show you something, guys. This is a 3-day 30-minute. This is the monkey bars on it. If I go to from the monkey bars, go to 20 days, this is the H pattern that everybody's looking at. In order for us to continue higher, we have to break through the 3080 area in order to continue back up. And we do see these gaps here on these, major moves from the coronavirus. Hope, look forward to seeing you on Discord or at Solstice ATR. Check us out. We're here to help you. Have a great week and enjoy your weekend. Take care, everyone.